Okay, so this is the basically revision day, and today I'm going to discuss. This is Mustafa Mirchawala. Today I'm going to discuss the latest past paper of September 2021 attempt, available on accaglobal.com. Okay, now I am sure you guys are working hard because these are ending days, and ending days are very important. And normally we all work with pressure. This is our routine. That means these last days are very productive days for all of us, right? So recently I attended a meeting in ACCA, and they told this global issue that those students who failed an applied skills module, the major reason of failure is last 40 marks, not first 60 marks. The major reason of failure is last 40 marks, not first 60 marks, right? They openly told for every paper on average, right? So it's better for you guys to practice last 40 marks more now, last 40 marks more, especially on the ACCA software, because in the exam you have to solve on software, right? Okay, plus I have also sent you guys the Excel file. Those who asked me, even it's included in my LMS, about the Excel files of final accounts, consolidation, and cash flow. Almost 80% get is solved in that, right? Okay, so without wasting any time, we are moving towards the last 40 marks, because in the ACCA website they only disclose the last 40 marks. So according to F7 format, and in F7 format, last 40 marks contains 2 questions only, 20 marks each. One normally comes with ratio analysis, and the other one is sometime consolidation and sometime final account. Okay, so as the ratio analysis needs more effort, so that's why I want to start with ratio analysis right now. Okay, because right now you guys are fresh. Okay, and now you don't have option to sleep because very few days left. So in front of your screen is the latest past paper December 2021 attempt, and this is the last question of that which is basically related to ratio analysis and a little bit about consolidation. Okay, now let's start. The Pinardi Group operates in fragrance and cosmetic industry. That means they are not dealing with any perishable products. It's not food like thing. It's not food or something. It's a non-perishable product. Okay, on 1st of January X7, keep these dates in mind, Pinardi company disposed of one of its subsidiaries. Yes, it's part of your course. Even if you have studied the consolidation, complete disposal is part of your course. The way we buy the running business, the same way we sell the running business. So disposal means sell of running business. And I'm sure you all know how to calculate gain or loss on disposal. Gain or loss on disposal of subsidiary. Gain or loss on disposal of subsidiary, right? At the time of disposal. And in this question, they have asked you to. Calculate this, and we'll do it. It's free marks. I should say it's a free marks. Now, Silva company, Pinardi, that means Pinardi is the parent. And that Silva is the subsidiary which has just been disposed of on 1st January X7. Please, how much cash we received? 42 million. This is the disposal proceed. We write it DP sometime or disposal proceed. Okay, the voice is perfect, please. Now, Silva company manufactures jewelry and was sold because the Pinardi Group wanted to exit this particular sector. Now, see the strategy, see the business. Ratio analysis, interpretation topic is about business. So Pinardi was dealing in fragrance, cosmetic, and one sector was jewelry. So now, you know why they sold this company, why Pinardi Group sold this Silva company, because now they didn't want to continue with jewelry business. They want to say bye bye to jewelry business, bye bye to jewelry business. Okay, right? So that means they are going to concentrate on few things now. They are going to concentrate on few things now, like fragrance and cosmetic. Okay, so one more thing, they sold complete jewelry sector. That means jewelry is a separate line of business, separate line of business. Now I would like you to guys to be very attentive. That means jewelry is a separate line of business, complete jewelry line of business we have sold. So now just think, previously we were dealing in three things. Just use your mind. Previously we had three business: fragrance, cosmetic, and jewelry. Fragrance, cosmetic, and jewelry. And now we sold the running business of jewelry. So this is a very relevant information. This is a very important and relevant information to shareholders. This is going to be a relevant information for shareholders, for shareholders. So hope you remember one standard, IFRS 5. IFRS 5, non-current asset held for sale. This is the first name, and discontinued operation. Remember, held for sale, HFS is the presentation of SOFP, but discontinued operation is the presentation of income statement. So here we have sold a proper operation. We have sold a separate line of business. So yes, it qualifies for discontinued operation accounting. It's qualified for discontinued operation accounting, right? Because just use your mind. Previously we were dealing with three businesses, and now we sold the running business of jewelry. So definitely we should show the breakup. We should show the breakup to our shareholders. We should show the breakup to our shareholders. We should show the breakup to our shareholders that we are no longer with this business. So don't expect anything in future from this jewelry side. Okay, so this presentation going to be relevant for them. I hope you got it. Okay, right? And one more thing, one very good thing, very good advice for all of you is that when you're studying these past papers, obviously these are not easy. Don't keep this thing in mind that we want to understand everything 100%. No. Even while solving the kit, don't expect you will understand each and everything 100%. No. If you understand 80%, that's very good. If you understand 70%, still good. You have to clear the paper. You don't want 100 marks. Did you ever score 100? Did you ever score 100 in your life? No. So why you keep this condition that I want to understand each and everything? No. You should go for maximization, not perfection. Okay, please keep this thing in mind and you will stay happy. Now start. Extracts from the consolidated financial statement. Now you need to work hard. Consolidated financial statement of Pinardi Group for the year ended 31st December X6 and X7. Now wait. Let me write their accounting period for you. Let me write this your accounting period for you. See, this is 1st January X6. This is 31st December X6. Okay, and this is 31st December X7. Here in this year we had P company, we are P company, and we had, let us say, 3 subsidiary: Silva, A and B. S for Silva, and A and B. Just A and B are imaginary names. A and B are imaginary names. So last year we had 3. Now on the first day, look at here, on the first day of this next accounting period, the first day of next accounting period means 1st January X7. We sold Silva. So that means in this year we have only two left. A and B. That means Silva was removed. Silva was sold on the first day of next accounting period. So last year, in the last year income statement, last year consolidated income statement, Silva was included, but this year Silva is not included. Last year Silva was included, but this year Silva is not included, obviously, because we sold it on the first day. We sold it on the first day, and I'm sure you know that income statement is always prepared for the year. For the year. Income statement is always prepared for the year. So this Silva is not included in this current year. Okay. So again, one little issue. If you compare last year with current year, obviously this comparison is not like with like. This is a basic comment. Which you can do. Last year, there were Silva business was also included. Last year, Silva business was also included, but this year, this Silva business not included. Okay. So comparing last year consolidated income statement and this year, there is a little issue. There will be a little issue of comparison. Okay. I'm sure you got it if you're not sleeping. Now, the two income statement are in front of you. Listen. If you see, the revenue went down. From last year to this year. Can anybody tell me 122,400 less 98,300? 122,400 less 98,300. 122,400 less 98,300. It's 24,100 down. Okay. Now, operating expenses also down. By something 3. How much? 37,400 less 33,700. 37,400 less 33,700. How much? 3,700. Okay. So just think, revenue decreased by a big amount, but operating expenses decreased by a little amount. Now, use your common sense. One reason for decrease in revenue is the bye-bye of that subsidiary. Because last year that subsidiary revenue was also part of our income statement. Last year, that subsidiary revenue was also part of our income statement, but this year it is not. So that's why this is the reason. Okay. So let me explain you with a very good style. In the last year, see, this S was included, A and B also. S, A and B. S means Silva. This year only A and B. So if you compare last year with this year, this comparison is not good. So to make this comparison, what we should do? So to make this comparison like with like, what we should do, we should go back last year. We should go back last year and we should remove this S. We should go back last year and we should remove this S. This S means Silva's revenue from the last year. Then if we compare, we can see the true performance of this A and B. I repeat last time. Last year it was S, A and B, Silva plus A and B. A and B are imaginary names. And this year only A and B. So this comparison is not like with like. So what we should do? We should go back last year and we should remove Silva's. From last year income statement, we should remove Silva's revenue, so that we can see the comparison like with like. As a student, you may request, sir, can you do it? Sir, can you do it for us? Yes, within a minute I can do it. Just relax. See this. Results obtained from Silva's individuals published financial statement. Can you tell me what is the revenue of Silva last year? Can you see what is the revenue of Silva's last year? It's 36,000. It's 36,000. Okay, last year. Go back to the above income statement. See this. Just subtract 122,400 minus 36,000. 122,400 minus 36,000. 122. It's 86,400. That means, just think over it. Please just think over it. That means last year A and B, the imaginary names, A and B made 86,400. And this year A and B made 98,300. Last year A and B made 86,400, and this year A and B made 98,300. So almost increment, almost an increment of 12,000 means 12 million. Almost an increment of $12 million, which is good, That means our existing products working very good. Our existing products working very good. Are you getting the point? Previously, when we were comparing, this comparison was not like with like, but now it is. Previously, the comparison was not like with like, but now the comparison is like with like. So last year it was 86,400 without silver, and this year it is 98,300. 98,300 this year, 98,300. Okay, right? Okay, I think our admin will send a WhatsApp group link. So kindly must join that WhatsApp group whenever he sends you. Okay, the admin guy must join. I'll provide you more resources and these files on the WhatsApp group. Okay, now next thing. So these are the numbers, and this is a little SOFP is also given. See, this is 31st December 06 SOFP. Okay, and this is 31st December 07 SOFP, right? Last year the inventories was 22,400. Now it went down. Inventories went down. Maybe that Silva took some inventory with her. Then 14,600 was the last year cash, and this year cash was 31,400. 14,600 was the last year cash, and this year cash was 31,400. Can anybody tell me how much cash increased? How much cash increased? 16,800 or around 17 million. 17 million cash went up. By 17 million. 16,800, or you can call it 17 million. Now listen the issue. You remember the first line, in the first line we read that we sold the Silva for $42 million. We sold the running business of Silva for $42 million. That means $42 million came to us. $42 million came to parent company. So there must be an increase of 42 million in the cash. There must be an increase of 42 million in the cash. But the increment is only 17 million. Increment is only 17 million. So where the remaining cash gone? I repeat. Last year cash was 14,600. This year cash was 31,400. Okay, so cash increased by almost 17 million. But it should have been increased by more, because on the first day of this accounting period we sold a big giant company. Parent company sold a big giant company and received 42 million cash. So this increment should have been $42 million, but this is only $17 million. That means, look at here, parent company did some spending. 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 Okay, are you getting what spending? Giving you some chunks. See, last year non-current liabilities was 61,000 and this year 42,000. Last year the non-current liabilities was 61,000 and this year 42,000. So the non-current liabilities almost decreased by, I think, 19 million. 61 minus 42 is 19 million. So there is a possibility. Just hope you remember my dialogues. In ratio analysis, we have to use maybe, possible. There is a possibility that some of the cash we received from the disposal of that company, we use that cash to repay the loan. We use that cash to repay the loan. We use that cash to repay the loan. Okay. Are you getting? Are you getting? This may be the reason. This may be the reason. Yes, we received $42 million. Look at here. We received $42 million. Can you see this number? We received $42 million. So our cash must have been increased by 42 million, but the cash only increased, by 17 million. But the cash only increased by how much? 17 million. So this is something unacceptable. Where the cash went? So the answer is maybe we have used some cash to repay the loan. One more thing. Now I'm going to discuss something new. You have studied first time in your life. You are going to study first time in the life. It comes, this thing, what I'm going to speak, this comes in SBR paper routine. So don't need to worry about it. And even in the examiner report, examiner has written that if you want to discuss this point, you can. This is an additional point. This is an additional point, extra point. Okay. You know, before disposal, one day before disposal, just think, one day before disposal, Silva was our subsidiary. Look at the video. One day before disposal, Silva was our subsidiary, and subsidiary means adding together. That means that subsidiary was stick to us. Everything, cash, inventory, receivable, payable, everything of that subsidiary was stick to us. The next day when we sold, look at here, the next day when we sold the running business, everything of that company went down. Everything of that company was removed from us. So there is a possibility that company was cash rich. There is a possibility that Silva has had its own cash reserves. So when we sold Silva, that cash reserves also gone. When we sold that Silva, that cash also gone. That's why the pure 42 million effect we can't see. That's why the pure $42 million effect we can't see. Yes, it's a technical point. I repeat, there is a possibility that when we sold the running business of Silva, we sold everything. That everything went out. So that means the cash balances of Silva also gone from us. So there is a possibility that Silva had big cash balance. And because we sold the running business of Silva, that cash balance also gone. That's why our cash didn't improve. That's why our cash did not improve by $42 million straight away. Because we received $42 million from the sale. I hope you got it. And if you don't get it, don't worry. Even the examiner has written in its comments that this is a technical point. Okay. Right now, the next thing, the accounting assistant has not accounted for Silva. See this, the accounting assistant has not accounted for Silva as a discontinued operation because the disposal occurred on 1st January X7. So no figures from Silva have been included in 2007 financial statement extracts above. Now, look at here. The accounting assistant is saying that obviously it was sold on the first day. Obviously, we have sold the running business on the first day. So there was no income related. There will be no income, no sales, no cost of sale, no GP, no other expenses related to this Silva. So that's why there is nothing to report. Nothing to report about Silva. That's why we didn't do discontinued operation accounting. But one thing I would like to add, that this event, I told this in the beginning, this event qualified for discontinued operation accounting. Yes, this event qualified for discontinued operation accounting because we sold a separate major line of business. We sold a separate major line of business. We sold a separate major line of business. So this event qualifies, this event qualifies for discontinued operation accounting. Okay. Now, no figures from Silva have been included in 2007 financial statement extracts above, obviously because we sold on the first day. The proceeds from the disposal have been recorded in cash with all net assets and goodwill de-recognized. Obviously we de-recognize all everything. When we sell the subsidiary, we de-recognize. The balancing figure was held in a suspense account. Wait, let me write something. Time waste, it's nothing. This question is not about suspense account, so don't worry about it. No, you won't get a 0.5 mark even for this. This is not about suspense account. Leave it. Okay. So now read the requirement 2 and read the point number 2 and 3. Because of Azan, I'm just 1 minute. I'm not saying anything. You read this point 1, 2, and 3, and also join the WhatsApp group. Read these lines, please. Okay, listen. Now, point number 2. Pinardi, a company acquired 100% of Silva company on 1st January X1. Now, this is about the history. That we bought it around 6-7 years before. We bought this company 6-7 years before, and you know this much consolidation. When we buy running business, we pay goodwill. And the goodwill was, at that time, the goodwill was 6 million. At that time, the goodwill was 6 million. At that time, at the rate of acquisition, the goodwill had been impaired by 30% in 2005. That means in between. In previous years, goodwill was impaired by 30%. Okay. So come on, use your calculator, be active. 6 million means 6,000. 6 million means 6,000 was the original goodwill. 30% has already been impaired. So 6,000 less 13% is 1,800. 6,000 less 30% is 1,800. Now what is the remaining amount is left? 4,200. So what is the goodwill? All of you, the champions of consolidation. What is the goodwill at disposal date? It's 4,200. Sir, why you are asking this at disposal date? Why you are emphasizing the disposal date? Because we need to compute gain or loss on disposal of this subsidiary. We need to calculate the gain or loss on disposal of this subsidiary, gain or loss on disposal of this subsidiary, gain or loss on disposal of this subsidiary, gain or loss of or disposal of this subsidiary. And you know, for consolidated gain or loss on disposal, you need everything. You need all data for disposal date. You need all data for that subsidiary at disposal date. Hope you remember the lecture. Right now, the net assets. Yes, this is the net assets at 1st January. This is the disposal date, worth 35 million. The net assets of Silva, see, the net assets of Silva at 1st January X7 were 35 million. Now, just wait and let's eat something, some free marks. Let's eat some practical free marks. Let's enjoy some practical free marks. Okay, wait. What they are asking, see the requirement number one. Requirement number one. Yes, it's 2 marks, but very easy marks, very easy marks. Calculate the gain on disposal of Silva company that would need to be included in the consolidated profit or loss for the Pinardi group for the year ended 31st December X7. For the year ended 31st December X7. Okay, so we need to calculate gain or loss on disposal. Now wait, remember, for gain or loss on disposal, we must have knowledge of NCI as well. NCI, is there any NCI? Is there any NCI? Let's check. Is there any NCI? No, 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 no. Because we acquired 100%. So more easy, very, very easy, very, very easy. Okay. So there is no NCI. Just you have the proceeds. What is the proceeds? 40. What is the proceed? Wait, it's 42 million. 42 million is the proceed. 42 million is the proceed. And see the remaining. Calculate it. Calculate it. Come on, calculate it. Come on, calculate it. Come on, calculate it. Yes, majority are correct. Students, please calculate the gain or loss, gain on disposal. Gain on disposal. Correct. Quick do it, quick do it. It's 2 marks, only 2 marks. Excellent, excellent. Let me do it for you. First of all, gain or loss on disposal. This is requirement A, requirement A, requirement A. Proceeds was 42,000. Proceeds was 42,000. Okay. Now, fair value of net assets of S company at disposal date. Don't forget, you have to use the data at disposal date. These are the examiner comments. You guys don't use disposal date data. You guys don't use disposal date data. That's why you do mistakes. You are computing gain on disposal date. So this was 35 million. That is 35,000. Okay. Now let's goodwill at disposal date. First, you need to calculate goodwill at disposal date. What was the original goodwill? My dear students, my dear respected students, the original goodwill was 6,000. The original goodwill was 6,000, but it was impaired. It was impaired by 30% in between the journey. So now at disposal date, this was only 4,200. At disposal date, this is only 4,200. So now let's subtract these two. Let's subtract these two, and everything is 100% now. Everything is 100% now. Everything is 100% now. So no NCI. This is also 100%, and this is also 100%. So exact gain you will get 2,800 is the gain on disposal. 2,800 is the gain on disposal. 2,800 is the gain on disposal. You scored 2 easy marks. You scored 2 easy marks for this. You scored 2 easy marks for this. You scored 2 easy marks for this. Even those who really studied, those who really took the classes, or those who really worked hard, they know with NCI, the calculation is little bit technical. With NCI, the calculation is little bit technical. There is no NCI in this case. So simply you need to calculate. You just sold the running business and you compute the gain on disposal. You compute the gain on disposal. You compute the gain on disposal. Okay. But the major thing is use each and every data. Use each and every data of disposal date. Use each and every data of disposal date. Okay. One thing I would like to clarify, this is a fact, that you are in revision days, so you must know the basic things. Please, you must have studied the normal course or basic things. Okay. You are not studying first time. And no need to copy. I'll share the slides with you on the WhatsApp group. No need to copy it, please. Now, the second requirement is again easy. The second requirement is again easy. Yes, it is related to IFRS 5. It is related to IFRS 5. IFRS 5. There are two separate names of IFRS 5. One is held for sale, non-current asset held for sale, and the another one is discontinued operation. Okay, held for sale is about SOFP. Held for sale is about SOFP because it's related to current and non-current thing, current and non-current, which is SOFP thing. But discontinued operation is the presentation of income statement. Discontinued operation is the presentation of income statement. Discontinued operation is the presentation of income statement, is the presentation of income statement. Please be careful. Okay, now, so discontinued operation, first of all, let's make some mind. For example, I have 100 shops. And today I just sold one shop. So this is very immaterial. Which is immaterial? So it's not, now I should not tease. Now I should not disturb. I should not tease my shareholders by reporting this as a discontinued operation, because out of 100 shops, I just sold one immaterial shop. So this won't affect their decisions. Okay. So, but if I sell a material segment, if I sold a material segment, or hope you remember a separate major line of business, like I used to have 3 products: shampoo, toothpaste, and soap. And I sold the running business of shampoo. So yes, I sold complete major line of business. Okay. Or think it geographically. I had one product. I deal in only one product, but I used to work in 3 different markets, like Pakistan, India, and Turkey. Now I'm withdrawing myself from Turkey. I'm closing down all operations of Turkey. So that means now I should inform my shareholders that from next year there won't be any revenue from Turkey. There won't be any profits from Turkey, right? Okay. So my dear student, it should be a major separate line of business. You are getting? So this question is about IFRS 5, the second part, discontinued operation. See, explain whether or not disposal of silver is likely to constitute a discontinued operation and the correct accounting treatment for this. Okay. Yes, we should say that this in the beginning of the question, they openly said that they are going to withdraw themselves from jewelry sector. So jewelry is a separate line of business. Plus, they receive $42 million. Which looks a material amount if you see the balance sheet. You guys are no more kids now. $42 million is good amount for this company. $42 million. That means it's a material transaction. So yes, you should report this as discontinued operation. But yes, this is the fact that in this accounting period 2007, because it is sold in 2007, it is disposed of in 2007. So in 2007, it's a discontinued operation. And hope you remember the definition of discontinued operation: the operation that has been sold. So yes, it is sold. So it should be classified as discontinued operation. But the problem is, it is sold on the first day. So there is no more sales, cost of sale, GP, other expenses, other income related to this segment. Otherwise, it would be reported in a separate line, profit and loss from discontinued operation. But yes, there is one thing related to this operation, and that is gain on disposal. There is one thing related to this operation, that is gain on disposal. So each and everything, open your ears, each and everything related to that segment, we have to report in the separate line, that is profit and loss from discontinued operation. Continuing operations are separate. Discontinued operation is a separate line. Okay. So in 2007, we should report this 2.8 million gain on disposal as a separate line in the on the face of the income statement with the heading of profit and loss from discontinued operation. Now, one more thing. Only few students know this. Only few students, the comparative thing. You know the comparative. When we report, when we showed data of 2007 to shareholders, when we show data of 2007 to shareholders, we have to show comparative numbers as well. We have to show comparative numbers as well. And please, I request, if you don't believe, you can check my notes, my class notes, my PDF files. I have written it with my own hand. My handwriting is there. That if a segment or division is classified as discontinued operation in the current year, if a segment is classified as discontinued operation in the current year, it must be reported as a discontinued operation in the comparatives of last year. So that shareholder will have good information. Shareholder will have good information to take decision that whether the company has taken the right step or wrong. I'm sure you know this. So these 3 marks, it's a quality discussion. It's a quality discussion of IFRS 5. Okay. Now, check it out. I have written something for you guys. Please check. Please read it, and read it with confidence. Silva company likely to meet. Now try to understand the language also. Don't try to give the exact word. Likely, more likely, possible, possibly, like, because jewelry is a separate major line of business which has been disposed of during the year. As it is a discontinued operation, its results would be removed from normal. This is the normal treatment. See, this is going to be the normal treatment. Removed from normal continuing operation, and would be presented separately with the heading of profit or loss from discontinued operation. I hope you remember this. The separate line on the face of the income statement, profit or loss from discontinued operation. Okay. Together with the gain on disposal of 2.8 million. Yes, this 2.8 million will be reported separately. As Silva was sold on 1st January X7, the first day, think over it, the first day of your accounting period. So there are no operating results in the current year. There are no sales, there are no cost of sales. Nothing will be added in this year of Silva, in this 2007 year of Silva, because Silva is gone. Silva is gone on the first day. Now, however, the results of 2006 must be shown as a discontinued operation for comparative purpose. Only those students who have studied this standard, they know this, that we have to do it in the last year. We have to do it in the last year comparatives as well. Okay. So this is the 3 marks requirement. Again, it is related to IFRS 5. We haven't started ratios yet. Okay. So just see the taste of examiner. Don't expect that you will get complete 20 marks on ratios. No, because there is a big course. So in one question, I will show you the final account. I will teach you final account today. Final account. They have tested 20 marks final account, and with 20 marks final account, they asked something related to consolidated disposal, and then they tested the ratios thing. Okay. Now let me move the screen. Let me move the screen. Let's read something. Okay. Point number 3. We were on point number 3. Now be careful. We have two accounting periods in this question. First is 2006 and the second is 2007. The last year was 2006. This year is 2007. We sold the subsidiary on the first day of current year. Okay, Silva. Now, as part of the sales agreement, the Penardi Group will receive an annual fee of 2 million for the use of the Silva company brand. Now, you know, with sale we receive some future income, because we have sold an outclass business. We have sold a Silva business. There's something very good related to that business. So on the sale, we put one condition on the buyer. At the time of sale of Silva, we put some condition on the buyer that each and every year, and for next 3 years, you have to pay us 2 million. You have to pay us 2 million for the use of this brand, for the use of this special brand. Okay. Now, the 2000 annual fee has been included in Penardi Group revenue for the year ended 31st December X7. Now, see this 2 million we have included here. This 2 million we have included. This is included here. This 2 million is included here. This 2 million is included here. So now some extra commentary, not for everybody. Even in the examiner report, they have said this is extra commentary. Those who want to do pure comparison like with like, those who want to compare like with like thing. So what I did, I removed, see in the last year, this 122,400, I removed 36,000. So this makes 86,400. This makes 86,400, and 86,400 means pure A and B, no more Silva. 86,400 means pure A and B, no more Silva. So when you remove Silva's revenue in the last year, so you should remove Silva revenue from current year. So in this 98,300, 2 million is still related to Silva. In this 98,300, 2 million means 2,000. 2 million means 2,000 still related to Silva. So if you remove this Silva from 2007, so the answer will be 96,300. 96,300. Now wait. Now can you compare? Now can you compare 86,400 with 96,300? 86,400 with, so it will be around 10 million. It will be around 10 million. It will be around 10 million. So if you do pure like with like comparison with last year and this year, if you do pure like with like comparison of last year and this year, so removing Silva, removing Silva, so there is a pure increase of 10 million in the revenue, which is not bad. There is a pure increase of 10 million in the revenue, which is not bad. That means our existing sectors are also good. That means our existing sector is also good. Now, one question raised. Sir, this should be this is like what we call it, royalty. This is like royalty. We are receiving royalty. So sir, this should be included in other income. This should be included in other income. Yes, there is a possibility, but the question has already been solved by the examiner. The question has already been solved by the examiner. So we just need to comment on it. We just need to comment on it, that whether we have to include Silva's or not. And what about with Silva's comparison, and what about without Silva's comparison? So if we have to remove it, we just want to remove Silva for a while. We just want to remove Silva for a while. So to check the pure performance of our existing sectors, Okay. Now, please. This is Silva's single companies, individual companies financial statement. This is Silva's individual companies income statement last year. This is Silva's individual companies income statement last year and current year. Okay. Now, prior to the disposal of Silva, Silva company used to use some property belonging to Pinardi Group. Now, you know, previously we were the parent. Previously, we were the parent company. We were the parent company of Silva. So we had given some of our properties. Okay, use it. Some of our property, we allowed them to use our properties. Okay. Now, following the disposal, Pinardi Group moved its cosmetic division into this property. This is a very good move. Now, what happened? When previously Silva was our subsidiary, so we used to do favors. We used to do favors with Silva, and we allowed them in our property. Okay, use our premises. But now Silva is no more. Silva is gone. They are not part of our group. So now we said, please leave the premises. Please leave the premises. And we moved our cosmetic business here. And see the data. See the data. Previously, the cosmetic division had leased external facilities for 2.5 million. Just think, we were paying 2.5 million for that cosmetic division. This is a positive point. At 1st January X7, the lease had 10 years remaining, 10 years remaining for that cosmetic lease. To exit the lease, Pinardi Group made a one-off payment of 3 million to the lessor and recorded it as an operating expenses. It's like redemption penalties or early redemption penalties. You know, I'm sure those who have studied F9 FM paper, they know very well about these redemption penalties, early redemption penalties. What is early redemption penalties? If you have taken a loan from a bank for 20 years and initially you promise bank to repay loan after 20 years, easy with interest, but suddenly after 2 years you said, okay, take the loan back. So the bank will be angry with you. Bank will say, why you are returning early? Because bank was expecting a big interest, 20 years interest, and now you are giving only 2 years. Now you are giving only 2 years interest. So the bank would be angry. So that's why they put early redemption penalties. So see, this is the one-off hit. This is the 3 million one-off hit, but it's good for our long term. It's good for our long term. Students, don't sleep. It's good for our long term because we don't need to pay now 2.5 million every year for next 10 years. We don't need to pay 2.5 million for next 10 years, 2.5 million per year for next 10 years. It's a very good thing. And you know, this 2.5 million is a sort of fixed cost. It's a sort of fixed cost every year. And I'm sure you are well aware of this famous dialogue. I'm sure you guys are well aware of this famous dialogue. Fixed cost increases the risk of owner. Fixed cost increases the risk of owner. Fixed cost increases the risk of owner. So thank God, because of this disposal of Silva, now we are on our own premises. We are on our own premises. We don't need any rented or leased premises. We have our own premises. So that's good. This is a positive move. You need to highlight this. Even in the conclusion side, we need to highlight this. Okay. This is towards the betterment of the company. Now, the next thing is related to IAS 21. Next thing is related to IAS 21. The Pinardi Group acquires raw material from overseas. Okay, so when you buy from overseas, so there is a risk which we call exchange gain or loss risk, exchange rate risk. I'm sure you all have done this standard. In 2006, the group recorded a foreign exchange gain. Last year it was a gain. And in 2007, group made a foreign exchange loss. Both items were recognized in operating expenses. You know, this thing you can highlight that last year there was a gain and this year it is a loss. So this year your operating expenses would be higher because of this. There will be operating expenses will be a little higher because of this, right? Because this time there is no gain, it's a loss. Okay. And this thing clearly identifies that company has some foreign exchange risk as well. This company is risky. This company is risky because they are dealing in foreign exchange. They are dealing in foreign exchange. They have some foreign exchange connection. So this is a riskier point from that company point of view. Now again, easy marks. Get ready, get ready, get ready to grab, get ready to grab. C. Point number C. Just read it and enjoy. Read it. Calculate the following ratio using pre-formatted table for the Pinardi group for 2007 and 2006. Simply, you have to calculate these four numbers, and they have not indicated any, they have not said to adjust anything. No need to adjust. Just Pinardi group means consolidated. Pinardi group means just go to the consolidated income statement. Just go to the consolidated income statement and start calculating these four. Start calculating these four. Okay. And using pre-formatted table, if you see this question on the ACCA software, they will give you a proper boxes for this. They will give you proper boxes for this. Okay. For special this requirement will have the special section. Otherwise, with the commentary, you have to write in the Word. The commentary you have to write in the Word. Okay, right? So you have to calculate these four. Now you will say, sir, where is the data? Now let me show you the data, and I would advise you to take the picture of that, and then we all will calculate. No need to waste time on this easy requirement. No need to waste. Come on, see this. This is the data. Wait, let me clean it for you. Okay, this is the data. This is the data. Can you see? Take the picture. We don't have to do any adjustment right now. Just we have to calculate simple ratios. They in the requirement, they have not indicated anything. They have not indicated. They just requested you to calculate. They just requested us to calculate. They just requested us to calculate the four ratios. Better take the pic and start yourself. Start yourself. All of you take the picture and start the ratios. Start the ratios. Okay, please. I'm moving the screen. Okay, the first thing is GP margin. The first thing, I have the question paper with me. You have the picture. You have the picture. Okay. So the first thing is GP margin. GP margin. What is the GP of 2007 is 50,700 divided by 98,300 times 100, which is okay. And for 2006, you have the number, you just took the pick. 50,600 divided by 122,400 times 100. So it will be okay. Now operating margin, operating profit margin is operating profit divided by sales. Operating profit divided by sales into 100. Okay. Operating profit is PBIT. PBIT. Okay. So this will be, see this, 17,000 divided by 98,300 times 100, which will give you 17.3%. Okay. Now the next is 13,000 next year. Now interest cover. Interest cover means interest cover shows interest paying ability of the company. Interest cover shows the interest paying ability of a company. Okay, so what's the formula? The formula is PBIT divided by interest expense. PBIT, which is 17,000. You have the picture. I told you to take the pic of the question. I told all of you to take the pic. Better you took it. Divide by interest expense here is 3,200. So the answer will come in times. It is 5.3 times. Now, what about this year? It's 13,200 divided by 5,500. So this will be 2.4 times. So yes, this ratio shows the improvement. See, last year the ability was less, now more ability. Interest cover, the higher the interest cover, the better it is. The higher the interest cover, the better it is. Now we have good interest paying ability. We have good interest paying ability, okay? Now, inventory turnover in days. What is the formula? Closing stock divided by cost of sales. Closing stock divided by cost of sales into 365. Closing stock divided by cost of sales into 365. So what is the closing stock? Go and check. It was 13,300 divided by cost of sales is 47,600 times 365. So this will be how many days? 102 days. Okay. And this year, if we check, it will be 22,400. Closing stock is 22,400. Cost of sales is 71,800 times 365. This will be 114 days. 114 days. Okay. You got it? These are the 4 marks, very plain marks. Total, the most easiest marks of this question were this requirement A and C. Yes, for B, everybody can't write on IAS, IFRS, but for A and C are scoring. A and C are scoring. A and C are scoring marks. A and C are scoring marks. Did you understand this part? Did you definitely understand this part? Please write on the chat box. Okay. Now, let's read the last requirement first. First, you can write, wait, one question. If you want to round off, you can round off till 2 or 1 decimal places. It's not a big issue. It's not a big issue because this thing relates to last 40 marks. Last 40 marks. It's not an MCQ. Now, so this is, listen something. Can anybody tell me what is the interest, why the interest cover is increasing? Interest cover, previously it was 2.4 times, now it's 5.3 times. It's good. Your interest paying ability is increasing. Interest paying ability is increasing. Now, basic mathematical commentary. Listen, the maths commentary. You know why? You know why this is increasing? Because the numerator is going up. Numerator is going up. That means your profitability is going up. That's why your ability is improving. And your denominator, the interest cost is going down. Your denominator is going down. So your numerator is going up, which is good for any number. And denominator is going down, which is also good, for the final answer. So your profitability is going up and the finance cost is going down. That's why your interest paying ability is improving. Now, one last question. Why? Open your eyes and think over it. Open your ears, think over it. Use your brain. You know why your finance cost is decreasing? Why your finance cost is decreasing? Because your non-current liabilities went down. Your non-current liabilities went down. And you know, one of the reason why your non-current liabilities went down. One of the reason why your non-current liabilities went down. Very good. Lease. Because you broke one lease. You just threw away one lease. You just cancelled one lease. And that was a 10-year lease, 10 years remaining. that in that lease 10 years was remaining. 10 years means there would be a big proportion. There would be a big proportion of non-current liabilities. There would be a big proportion of non-current liability in that lease, and that lease ran away. So there is one point was this also. One point was this also. Okay. Now, some commentary we can do with just discussion. Can you see the GP margin? Last year it was 41.3. This year it is 51.6. So you would say that the GP margin improved. GP margin improved. So it's good. It's good. We sold that bad sheep. We sold that bad sheep. But one thing as a student you can think, sir, in the last year numbers, Silva's data was also included, but this year number Silva is not included. In the last year numbers, Silva's data was included and this year is not included. So looks like this comparison is not like with like. This comparison is not like with like. So wait, look at here. Let's calculate the separate GP margin of last year. Let's calculate the separate GP margin of Silva. All of you look at here. See this. This is the GP. This is the sales. This is the GP. This is the sorry. This is the GP. 12,600 is the GP and 36,000 is the sale. 12,600 is the GP and 36,000 is the sales. How much is the separate GP margin? How much is the separate GP margin of Silva last year? 35%. See, separate GP margin of Silva is 35%. I pray that you understand maths. Separate GP margin of Silva was 35%. Open your eyes. And GP margin combined with other three. GP margin combined with the other members is 41.3. That means the other members were more powerful. This was weak. Silva was weak. It's about average, my dear. Separate GP margin of Silva was 35%. And the GP margin of Silva combined with other members is 41.3%. That means the other members were more rich. The other members were more strong and Silva was poor. Silva was not good. Okay, so this is a positive point for our existing products, and it looks like, it feels like this was the good decision of Pinardi Group. It feels like this is the good decision of Pinardi Group to dispose of that company, because that company's GP margin was not good as compared to the existing divisions. This is the evidence. This is the evidence. I hope this thing clicked in your mind. I'm explaining again, but you all should go to school now, because when you were in grade 6, 7, you didn't study maths, and you know this maths won't leave you till grave. Write it somewhere. Maths won't leave you till grave. This is the game of till old age. Till old age you have to cry. During shopping you have to cry. During pension you have to cry. During taxation you have to cry. Maths is maths. Maths is maths. Wait, let me give you some example. I'll give you. Just think, I earn $100 million, let us say, and my brother earns $60 million. I earn $100 million and my brother earns $60 million. If we take average of our two, the average will come out $80 million. I earn 100, my brother earns 60 million. If we take out average, the average will be 80. Okay. So the combined result is 80. The combined result is 80 of V2, and my poor brother result is 60. So that means I am rich. I am rich. And because of this average, because I am rich man and I added my result with a poor man, overall my result also went down. Did you understand now? That Silva's separate result was 35%, and Silva result combined with this group is 41.3%. That means the other members were more powerful, and this naughty this naughty Silva made the average down for everybody. Now you got it. Because I taught 3 to 4 years maths in my life, 4 years or 5 years. I was a maths teacher previously. I was a maths teacher. Okay, don't worry. It's good. You are asking now, but we have limited time. My dear student, we have limited time. So this thing is good now. Last year, your operating margin was 10.8%. Last year was your operating margin was 10.8, and this time 17.3. Wait, GP margin in absolute terms, it's increased by 10%. See, 41 and 51. 41 and 51 in absolute terms, it's increased by 10%, and operating margin in absolute terms, it increased by 6% something. 6 or 6.5%, 6 or 6.5% or 7%. So yes, yes, operating margin also followed the footprints of GP margin. And you know this is very old and routine commentary. Whatever effects comes on GP, it comes on operating profit, right? So operating profit margin followed it, but the numbers are not exact same. That the first number, GP margin, increased by 10%, and the second is 6.8 or 7%. Okay, so there is a possibility. Listen, easy, because there was some one-off expenses in the current year. There were some one-off expenses in the current year. There was some one-off expenses. Remember the 3 million penalty. The 3 million penalty was the one-off hit in the current year. This may be the reason. Second reason, there was some foreign exchange loss. Previously, last year it was foreign exchange gain. This year it was foreign exchange loss. Previously it was foreign exchange gain. This year it was foreign exchange loss, and that foreign exchange loss also hit your operating expenses. Okay, so these points you can highlight. Okay, now it's better we read the requirement, and now only you need confidence. You have done major thing, just confidence is needed. Okay, analyze the performance and position for the Penardi group for the year ended 31st December X7 compared to the year ended 31st December X6. 11 marks. If you get 6 marks, still it's good. If you get 6 or 5 marks, still not bad, because you scored good in other requirements, the practical calculation and the part 1. Your first target is to cross the border, 50 marks. That's it. 50 marks and you will be entered in the firm. That's it. Because there is a shortage of accountants now, especially in the subcontinent. People are going to the West, lot of people. So just score 50 and you will get the job. Now, first of all, my dear student, I have, in the beginning of the question, I invested time for this thing. See, the revenue in absolute terms, revenue increased by 24.1 million. Sorry, the revenue decreased by 24.1. But this comparison is not like with like, because last year Silva was included, this year it is not. Last year Silva was included, this year it is not. So when you remove this silver, then the comparison will give you 12 million increase. Then this comparison will give you 12 million increase, 12 million increase. So this is the major, this shows that our existing products, the cosmetic division and the other division is good. This shows our cosmetic and other division was good. The cosmetic and the other division was good. So nothing to worry about. Okay. And one extra commentary, I showed you this commentary. If somebody wants to include this, then the absolute amount of increase is 10 million. Then the absolute amount of increase of the other products was 10 million. Okay. So in the requirement, examiner asked two things. One, to discuss about the performance. You know what is performance is always for the year. Performance is always for the year. So for performance, you need to discuss income statement and income statement ratios. Income statement things and income statement ratios like sales, like you need to discuss GP margin, operating profit margin, interest cover. These are performance. And for position means statement of financial position like SOFP. SOFP. So for SOFP, the gearing ratio is for SOFP, and your what inventory turnover, receivable days, these all are position. These are position ratios. Okay. So in the performance, you need to discuss income statement numbers. In position, you need to discuss SOFP numbers. Okay. So let me take you to the discussion part. Let me take you to the discussion part. I'll discuss the conclusion. Don't worry, dear student. Now, the first heading I have given is performance, because examiner asked you two things. Examiner asked you two things. Okay. The first thing is performance and the second thing is position. So performance, and in performance, I've also given headings. You know, it's better whenever you need to write the theory, follow this pattern: heading, sentence, heading, then some discussion, heading, then some discussion. In this way, it would be easier for marker to give you marks. And your objective is to score marks. Right now, this is the only objective. Okay. So now, simple, look at here. And I don't want to waste time in typing right now, because my objective is to make you understand. The real thing is understanding. Okay. Now, revenue down by, simple English, simple words, no more extra, down by 24 million. Hope you remember the first shot, which may be due to the disposal of Silva. Yes, previously this Silva was with us. Now it's not with us. So the drop out is natural, which is in 2006 results, but did not contribute in 2007. Silva was part of the group in 2006, not in 2007. So this drop was natural, obviously. Also, this comparison is not like with like. See, immediately you pointed out this thing, the major thing. To make comparison correct, remember I did some engineering. I did some engineering with the income statement. Remember, to make comparison correct, we should remove 36 million revenue from 2006 results. So now there is an increase of 12 million. There is an increase of how much? 12 million from fragrance and cosmetic, which is good. Now, I have used this red pen. This red pen is extra. This is extra. This is extra point. This red pen is extra point. Okay. So those who want to write this, it's okay. And those who think this is difficult, leave it. Even in the examiner report, this is in the heading of extra marks. Also, 2 million revenues added in 2007 relating to the use of Silva name. Remember, we were getting the royalty. Which should also be removed to make comparison like with like. And if we remove this, then the net increase is 10 million. If we remove this, then the net increase is $10 million. Read it slowly. No need to rush. Okay. Now, the next thing is next heading is margins. Next heading is about margins. Margins are GP margins and operating margin. Go easy, go easy. GP margin and operating margin. Yes, I'll give you a break. So after 10 minutes, I'll give you a break. Second question we'll take a 5 minutes break. Okay. Please. And listen, now these are your ending days. Even I'm giving my time, so you should also give. Don't worry. GP margins up from 41 to 52. This what we observed. 41 to 52 in the normal. But separate GP margin of Silva in 2006 was only 35%. We all just calculated, which means other segments were better than Silva in terms of GP margin. The mathematical fight. Remember this point. That means Silva was poor, the other members were rich. We have done this point. Please accept it now. Now, operating profit margin also increased. One reason was that carried forward effect of GP margin. This is simple, and this is in my solutions of many questions I wrote this. Whenever GP margin increases, operating profit margin follows. Operating profit margin follows the GP margin. Operating profit margins follows the GP margin. Yes, remember? Now, operating expenses. This from income statement we took. Operating expenses decreased by 3.7 million. We check this in it. Some important factors for operating margins are there is one-off exit fee. There is one-off exit fee of 3 million to exit the lease included in operating expenses. You know, we could have seen, listen my word, we could have seen more good effects in operating margin, but just because of these one-off hits, we didn't find the good result this time. We didn't find a much better result. Okay. Because just think, if these payments wouldn't be there, we would be in a better position. We would be in more better position now. But as we have to bear this one-off hit, but yes, this one-off hit is again not bad at all. Because after getting this 3 million hit, we saved 25 million over 10 years. We saved 25 million over next 10 years. Remember the lease. There is a one-off exit fee of 3 million to exit the lease included in operating expenses, but this would create a long-term saving of 25 million over 10 years. I hope you remember shifting the properties. Also, the foreign exchange gains and losses, also part of operating expenses. Last year it was a loss, but this year it's a foreign exchange gain. This is also a reason of good operating margin. This is also a reason last year. This is also a reason, sorry. Yes. Our original argument was that GP margin increased by 10%, but operating by 7. GP margin increased by 10, but operating by 7. Operating margin didn't go with the same speed. Because there were some one-off hits. And the two one-off hits we just saw. Number one was 3 million. Number one was 3 million exit fee, which we called early redemption penalty. And the second thing is this time there is exchange loss. Last year it was also the wait. Let me check. Last year it was again wait. Yes, in 2006 it was a gain and now it's a loss. Correct, 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 correct. Now it's perfect. Now it's perfect. Now it's perfect. Now it was perfect. Last year it was a gain and this year it was a loss. Okay. Last year it was a gain and this year it was a loss. Now it's perfect. Now it's perfect and it matches this, right? Did you understand this? Did you understand till now? Please, students, did you understand till now? Did you understand this point? Please respond on the chat box. Okay. Now interest cover, I just explained you during that thing. Interest cover means interest paying ability of the company. Interest cover means interest paying ability of the company, interest paying ability of the company. So, you know, interest in the formula of interest cover is PBIT divided by interest expense. So, you know why interest cover went up? Because our numerator went up, our numerator, the profitability went up, and the finance cost went down, the denominator went down. So both of these events created a positive impact on interest cover. Both of these events created a positive impact on interest cover. And now can anybody tell me, I asked you previously and you guys gave me good response. Listen, why your finance cost went down? Why your finance cost went down? Because there was a decrease in non-current liabilities. We just finished the lease. We just finished the lease. The exit of lease. The exit of lease was a positive point. Okay. So read it. Increase from 2.4 to 5.3 times. Reason for this is increase in profits. Increase in profits and decrease in finance costs. One reason for decrease in finance costs is the exit from the lease. Exit from the lease. Exit from the lease. Okay. So this is how simply you need to discuss. This is simple way of discussing it. Simple way of discussing this topic. Simple way of discussing this topic, right? Now the next thing is position. From position point of view, go and check the SOFP. Go and check the SOFP. Now wait, as a student, you may ask, sir, can we calculate gearing? Sir, can we calculate gearing? Can we calculate gearing? No, you don't have data. If you took the pick of the question earlier, you don't have equity. You don't have equity, anything like that. So you are not able to calculate gearing. That's why I have also not calculated the gearing. Okay. Now, but yes, the non-current liabilities went down by 21 million or something, from 61 million to 42. Non-current liabilities went down from 61 to 42. 61 to 42. So what was the reasons for the decrease in non-current liabilities? What was the reasons for decrease in non-current liabilities? Major three reasons. Quick listen. Number one, exit from the lease. Because the 10 years remaining life of the lease was there. So that is for sure some major non-current liability element was there in the lease. So when we just canceled the lease, our non-current liabilities went down. First reason. Second reason, there is a possibility when we sold our subsidiary. There is a possibility when we sold our subsidiary, we got the cash. When we sold our subsidiary, we got the cash. So there is a possibility we repaid the loan. And yes, there is evidence. We got 42 million. We got 42 million cash from that subsidiary, from the disposal of subsidiary, but our cash balances just increased by 17 million. Our cash balances just increased by 17 million. So this is an indication of repayment of loan. This is an indication of repayment of loan. I discussed this earlier. Let me show you this. See this, please. Your non-current liabilities previously was 61 to 42. Your cash balance was 14,600. Now it's 31,400. So your cash balances increased by 17 million. Your cash balances increased by 17 million, but you receive 42 million. You receive 42 and cash just increased by 17. So there is a possibility that you use some of cash. You use some of your cash in repaying your loan. You use some of your cash in repaying your loan. Okay. And one more thing, see, one possibility of reduction of NCL means non-current liability was the exit of Silva. There is a possibility that Silva was highly geared. There is a possibility that Silva was highly geared. Silva contained big liabilities, and now when we sold Silva, those liabilities gone. Those liabilities gone with Silva. So that's a good point. So that's why our non-current liability decreased. There is a possibility that Silva itself contained some non-current liabilities. And when you sell out Silva, when you sold out Silva, so those liabilities also went out. So that's why your non-current liabilities decreased. This is one of the reasons. One possibility of the reduction of non-current liabilities was the exit of Silva from current year SOFP. Silva may have, see the wordings, may have significant non-current liabilities which were removed when it was sold, So total three reasons for the decrease of non-current liabilities. Total three reasons for the decrease of non-current liabilities. Now, the last point, inventory days. I hope you saw the inventory days. Previously, it was 114. Previously, inventory days was 114, a very high, and now 102. Previously, inventory days was 114, now 102. Although it decreased a little bit. But still it is higher, 100 plus days. But again, I would say, when I started this question, my dear student, I say one thing, that they deal in cosmetics and perfumes. So they are not dealing in perishable goods. So this is not to worry about it. There is no need to worry about it, because they are not dealing in perishable goods. So higher inventory days are still manageable. Okay. Now, one reason for the decrease in inventory days may be that Silva left this year and inventory days went down. So that means Silva's inventory days were much more higher. That's why removal of Silva made us look in a better position. See, also the reason for decrease in inventory days was the sale of Silva this year, means Silva's product inventory days was higher. Okay, so that's why when we sold it, we are relaxed now. Without Silva, we are better. Without Silva, our inventory days improved. I hope you can connect the dots. Now, in the end, what conclusion? Some points I have written. It looks more good selling Silva, results improved. Without Silva, our revenue is also improving. Without Silva, you remember the comparison when we did comparison like with like of revenue. Our results improved, right? So it's better. Without Silva, we are better. Concentrating on few things, specialization, that's very good. Previously, we had 3-4 businesses, but now we sold one business and now we are concentrating on few things. That's very good. Specialization is very good thing. I'm sure you know about it. Okay. Cosmetic division utilizing group property, no need of lease properties. You remember when we sold Silva, then immediately we kicked them out from our properties, and now we are using our cosmetic business. We are using our own properties for cosmetic business. So no need of lease properties. So there is no fixed cost, means there is a reduction in fixed cost. And you know, reduction is in fixed cost is always a good sign. Reduction in fixed cost is always a good sign. So these are the possible conclusion you can write. These are the possible conclusion, my dear students, you can write. Okay. Now I have last question and then I'll give you a break. Definitely, we all need break. Did you understand 75 to 80% of this question? Please write on the chat box. 75 to 80. I don't want 100%. Did you understand 75 to 80% of this question? If yes, then it's better. It's better. Okay. Now let's take a 5 minutes break and then we'll move to the final account. Then we'll move to the final account. Then we'll move to the final account. Okay. Taking 5 minutes break. 5 minutes. Enjoy. Welcome back, students. Welcome back, students. Now one question is left. One question is left. That is final account. That is final account. One question is left. That is final account. Okay. So let's move to the question. Let's move to the question. This is the question. And this is very easy question. If you know, if you have some knowledge or normal knowledge of IFRS, you can do good. You can do good in this question. Okay. Now, and if you have solved your kit, all questions of exam kit, definitely that is a must thing. The following is an extract from the trial balance of MIMS company for the year ended 31st December X5. The first and the foremost thing is the accounting period. Accounting period, don't forget. Okay. Now, revenue, cost of sales, admin, distribution, income tax on the debit side, it means under provision. Income tax balance on the debit side is under provision, is expense, and over provision is income. Under provision is expense and over provision is income. That goes on the credit side. Then you have deferred tax liability opening. Then you have some provision opening, definitely there should be a case or employees issue or there is some opening provision as well. You have retained earning opening as well. Equity share capital issued OSC. This is called OSC, ordinary share capital, issued ordinary share capital, again beginning. Student, one thing should be very clear. You have to put blood in it. You need energy. Okay. This is basically your past paper, latest trend, latest fashion, latest question, which came in the last attempt. Then you have intangible assets, investment property, finance cost, investment income, and suspense account. This is just again time wasting. Suspense account, time wasting. Let me write time wasting, but still I'll give you a lecture on it in this, but then I'll give you the exam technique that don't waste time in exam. In exam, you don't need to include suspense account in income statement or SOFP. In exam, you don't need to include suspense account in income statement and SOFP or SOSHI, statement of changes in equity. So if you see the marking scheme or examiner solution, they don't even discuss this suspense account. They don't even discuss, they just solve the normal transaction and they make the statement. That's what their routine. Okay. So be very active, be very smart. Don't waste your precious time on any irrelevant thing. Now let's move. Note number one is IAS 8. Note number one is related to IAS 8. Let me say the name. Changes in accounting policies, changes in accounting estimates, and prior period errors. changes in accounting policies, changes in accounting estimates, and prior period errors. Hope you remember. So, you know, prior period errors, I'm talking about prior period errors. The prior period errors are error which are done last year but discovered this year. Error occurred last year but discovered this year. So if they are material errors, they should be adjusted retrospectively. They should be adjusted retrospectively. And open your ears. Retrospective means adjusted in opening retained earning. Retrospective means adjusted in opening retained earning. Okay, let me try. MIMS. One more thing, you must have studied F3 or basics before. For this F7 FR level, you must know FA basic knowledge. One thing, if you want to write somewhere, write it. Closing stock has direct relationship with profit, and opening stock, opening inventory has indirect relationship with profit. I repeat, closing stock has got direct relationship with profit. Closing stock has indirect relationship with profit. Sorry, opening stock has indirect relationship with profit. I am sure you know this. Now, MIMS company noted that there was an error in the inventory count on 31st December X4. Wait, 31st, this is our year end. 31st December X5 is the current year end, and 31st December X4 means last year end. So there was an error in the inventory count at 31st December X4, meaning that the closing inventory balance, previous year closing inventory balance in 2004 financial statement was overstated by 0.7 million. No entries have yet been made to correct this error. Look at here. When last year closing stock was increased. When last year closing stock was increased, so there is always a direct relationship of closing stock with profit. So that means last year profit also increased. I repeat, when last year closing stock increased, that means last year profit also increased. And when last year profit increased, that means opening, this retained earning also increased. I repeat, when by error last year closing stock increased, so closing stock has direct relationship with profit. That means last year profit also increased. And when last year profit increases, that means profit enters in the retained earning. So your opening retained earning also increased because of this error. Your opening retained earning also increased because of this error. So now you need to correct it. So let's decrease the opening retained earning. By 0.7 million. 0.7 is basically 700. 0.7 million is 700. So let's write, wait, let me see the question. It's in 1000. Okay. So 0.7 million means 700. So retained earning debit 700. Now the second entry. Now just think, last year closing stock means this year opening stock. Last year closing stock means this year opening stock. And just think, when you increased the opening stock last year, when you increase the opening stock of current year, so because of opening stock, cost of sales would have increased. Write the formula of cost of sales. All of you, please write the formula of cost of sales. The cost of sale formula is opening stock at purchases. Less closing stock. So when your current year opening stock increased, your current year cost of sales also increased. So now you need to decrease in order to correct the error. Now you need to decrease the cost of sales, and whenever you decrease the cost of sales, you credit it. Okay, so two things you have to do. Number one, reduce your opening retained earning by 700. And reduce your cost of sales by 700. Now my strict words, there is no need to make this entry. There is 0 marks to make this entry. Those who hate entry, there is a big crowd. There is a big crowd who hate double entry. There is a big crowd who hate double entry. No need to make it. Just directly adjust in trial balance or directly do it in the income statement. That's enough. That's enough. Those who hate the double entry, just leave it. And what you have to do, see this. Your retained cost of, see, this is cost of sale. Just reduce it by 700. This is retained earning. Also reduce it by 700. That's it. That's it. Now, how to post it? How to post it? Cost of sales. Obviously, I will make the income statement in front of you. Obviously, I will make the income statement in front of you. So cost of sales thing, I will adjust in income statement. Cost of sales thing, I will adjust in income statement. Sir, what about the opening retained earning? What about the opening retained earning? Opening retained earning is a SOSHI statement of change in equity thing. So when I'll be making SOSHI, first of all, I'll adjust the prior period error in the first starting lines. In the first starting lines, I will be adjusting this retained earning error. I'll be adjusting this prior period error. Okay. So just think over it. Think over it now. Think over it now. This is the adjustment. This is the entry. Those who love entry, it's okay for them. Those who hate entry, just don't even look at it. Those who hate double entry, just don't even look at it. Examiner even didn't make this entry. Examiner even didn't make this entry. No need to make this entry at all. So because of prior period error, you adjust the opening retained earning. And second, because your opening stock, last year closing stock means this year opening stock. So when this year opening stock is affected, so obviously opening stock also affects the cost of sales. Opening stock also affects the cost of sales. Use your basic knowledge. So you need to adjust, you need to correct cost of sales. And that's what I did. Read it and think it. Now, next thing, the provision. Wait, first let me show you. First, let me show you. And I would request, take the picture of this thing. Take the picture of this trial balance so that you can see from in your phone, mobile phone. Take the picture. If you don't have this question, please take the picture. Take the picture. If you want to study effectively, take the picture. Okay. So tell me, how much was the opening provision? 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 It was 4,600. At the beginning of the year, there was a provision of 4,600. What does it mean? Wait. Let me tell you the story. Let me tell you a very good story. See, our employees did case on us previously. Our employees did case on us previously. Just think, just a story. And you know, our lawyer advised us that yes, it is probable that we'll lose the case. So we made a provision. We made a provision of 40. How much? 4,600. Correct. We made provision was 4,600. Yes, we made a provision of 4,600 previously. So in the opening balance sheet, sorry, it was 31st December. What is the year end this time? Yes, sorry, X4. In the opening SOFP, there was a liability of 4,600. There was already a liability of 4,600. Okay, we were expecting that we had to pay. We had to pay 4,600. Now, the provision relates, please study with heart, for me, just for me, please. The provision relates to a court case in existence since December X4. It was a previous case. MIMS company settled this case on 31st December X5 for 6 million. See, we were expecting 4.6, but we had to pay 6. We were expecting 4.6, but we had to pay 6. So there is under provision. Have you ever heard about the word under provision? We were expecting 4.6, but we had to pay 6. So there is some extra expense. There is some extra bad news for us. There is some extra bad news for us. Now, the full, see this, the full amount was credited correctly to cash. Yes, we paid the cash with a corresponding debit entry being made in the suspense account, Okay, I'll teach you today suspense as well, but I will advise you in the end, no need to do this thing in front of examiner. No need. First of all, tell me, what was the balance of suspense account in the trial balance? What was the balance of suspense account in the trial balance? It was 46,500. All of you can see the balance of suspense account in the trial balance was 46,500 credit. Okay, so let me make it. See this, suspense account was 46,500 credit. Can you see? Suspense account opened on 46,500 credit. Okay, now let me teach you how to make the entries. Please look at me. Just for our sake, just for our understanding, I'm teaching you this. Otherwise in the end I'll tell you what to do in exam. Obviously, you paid cash, you paid straight cash 6,000, and the moment you paid cash, your all previous liability finished, your all previous provision liability finished. But tell me, how much is the extra amount? The extra amount is 1,400. So this is the entry. This entry you should have made. This is the correct entry. This is the correct entry which you should have made. Cash credit 6,000, you paid cash. And because of paying 6,000, your all previous provision, opening provision liability finished. So 4,600 debit and 1,400 was unexpected expense. 1,400 was unexpected expense. This is the correct entry. Now, what this stupid accountant only credited the cash. This stupid accountant only credited the cash and forgot to debit anything. This stupid accountant only credited the cash and forgot to debit anything. Do you think these two sides are same? Do you think these two sides are same? No. When the two sides are not same, then the trial balance is out. And whenever the trial balance is out, we open suspense account, and we open suspense account on the side where there is a deficiency. So suspense account, because of this part, opened on the debit side. Suspense account, because of this part, opened on the debit side. Now let's revise your basic F3 level. This is correct entry. This is wrong entry. This is correct entry. The first entry is correct entry. The second entry is wrong entry. So now let's make the correcting entry. Let's make the correcting entries. Listen, in the first entry, you should have credited the cash. And in the second entry, you also did credit the cash. So there is no mistake in cash. There is no mistake in the cash. Now, in the first entry, you should have debited provision and P&L. You should have debited provision and P&L, but you didn't. So let's do it. Let's do it. Provision debit by 4,600. P&L debit by 1,400. And now, you know, in the correcting entry, our objective is to close suspense account. And we open suspense account on the debit side. Let's close the suspense account. 6,000. This is the correcting entry. This is called correcting entry. This is called correcting entry. Now, as a student, you may ask one thing. Sir, how to adjust these things? How to adjust these things in the financial statement? Forget about the suspense account. How to adjust these numbers in the financial statement? Very easy. The provision will no more be part of. Now provision will no more be part of your year-end balance sheet. Provision liability will no more be part of year-end SOFP. Although there is no requirement of SOFP in this question. But provision will not be part of year-end SOFP. Second thing, you just debited P&L. So P&L, this debit P&L is your operating expenses. It will be part of your admin expenses. So you need to increase your admin expense by 1,400. you need to increase your admin expense by 1400 and I'll do it. You don't worry. Okay. Now, should I post? See, I just credited my suspense by 6,000. In the correcting entry, I just credited my suspense by 6,000. So let's credit it suspense. Let's credit suspense by, see, I just did credit suspense by 6,000. I just did credit suspense by 6,000. Now, as a student, you may ask, sir, the suspense account is still not closed. The suspense account is still not closed. Students, don't worry about it. I'll handle it. Students, don't worry about it. I will handle it. I will handle this suspense account. I will handle this suspense account. You just treat on the main things and these two entries, 1 and 2. That's it. And the special thing is you just have to book 1,400 in admin expenses. You just have to book 1,400 in admin expenses. That's it. That's it. Okay. Now, one more thing. I know there is a tax adjustment, but I am just ignoring the tax adjustment for the time being, just for me. Ignore the tax adjustment for the time being, so that let's finish the suspense account thing first. Then go to point number 3. I'm doing point number 4. On 30th September X5. On 30th September X5, active students, please think 9 months after from the start of the year end. 9 months from the beginning of the year end. MIMS company made a 1 for 4. 1 for 4 means 25%. 1 for 4 means 25%. The exercise price was 3.5 per share. The proceeds were correctly accounted for in cash. You know, because of right issue, we receive cash. Because of right issue, we receive cash. So they are saying that, yes, they debited the cash correctly. They are saying that they debited the cash correctly, with a corresponding credit entry being made in the suspense account. That means these innocent people forgot to credit share capital and share premium. I'm sure you all know the entry of right issue. They forgot to credit share capital and share premium, which I have to do it now. Okay, which I need to do it now. Don't worry. Now, first of all, look at the share capital at the beginning of the year. Let me move the screen. What was the share capital? See the question. The share capital was 60,000 and face value is 1. See the face. Don't forget the face value. Share capital is $60,000 at the beginning of the year and face value is 1. Can you tell me number of shares? Share capital, ordinary share capital is $60,000 and face value is $1 per share. So number of shares obviously is 60,000. Number of shares obviously is 60,000 shares. Number of shares obviously is 60,000 shares. 60,000 shares. Okay. Now see it. Have a look. Wait. See, your number of shares were 60,000 shares at the beginning, and there was a 25%. There was a 25% right issue. There was a 25% right issue. There was a 25% right issue. So 60,000 times 25%. New shares are 15,000 shares. New shares are 15,000 shares. 15,000 shares. Exact. Right. Now, what is your issue price? Obviously, right issue is not a free issue. Right issue is a monetary issue. So the IP issue price was 3.5. Face value was $1. So share premium should be 2.5. Share premium to be 2.5. Okay. So now let's make the original entry for right issue. Let's make a very easy original entry for right issue. So listen, we issued 15,000 shares. We issued 15,000 shares and we received how much? 3.5 for one share. We received cash of 3.5. So bank will be debited by 15,000 multiplied by 3.5. 15,000 multiplied by 3.5 is 52,500. Bank debit 52,500. Now, whenever You issue new shares, you credit the ordinary share capital. Whenever you issue new shares, you credit the ordinary share capital. So 15,000 multiplied by face value is 1. 15,000 multiplied by face value is 1. So ordinary share capital will be credited by 15,000. And my respected student, what is the difference? The difference is 37,500. The difference is 37,500. 37,500. So bank debit, share capital credit, and share premium credit. Bank debit, share capital credit, and share premium. This entry we should have made. This entry we should have made, but this, sorry to say, this stupid accountant just debit the bank or cash. The stupid accountant just debit the bank or cash, and he or she did not credit anything. He or she did not credit anything. So the two sides are not same. And when the two sides are not same, we open suspense. We open suspense. So 52,500 on the credit side. So 52,500 on the credit side. Now, can any gentleman make the third correcting entry? Yes. In the correcting entry, see, just compare these two entries. Bank is perfect. Bank is perfect. Bank is perfect. There is no mistake in the bank. Yes, you should have credited share capital and share premium, but you didn't. So let's do it. OSC will be credited by 15,000 and share premium will be credited by 37,500. Okay. And now obviously you need to debit suspense account. Obviously you need to debit suspense account by 52,500. Okay. This is the correcting entry. 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 Now just look at the magic. Look at the magic. You will say, sir, you close the suspense account. Sir, finally you close the suspense account. Can you see this correcting entry? Suspense account is being debited. In this correcting entry, suspense account is being debited. So let's debit it. Let's debit it. See, 15,000 one time and then 37,500. This is OSC and this is premium. So now can you see the both sides? Both sides are same. Here it is 52,500. Here it is 52,500. Suspense account is finally closed. Suspense account is finally closed. See the screen. Suspense account is finally closed. Suspense account is finally closed. But now take my advice. This I only taught you because there are some students who want to see the full picture. There are some students who want to see the full picture. So for those hard-working students, I solve this. Otherwise, now in the exam, you know, you don't need to show these working. No need to close suspense account because this suspense account won't go anywhere in your financial statement now. This suspense won't go anywhere in your financial statement. So now for the purpose of this question, just look at the relevant thing. Only this thing is relevant, see, or this thing, or this thing. And this thing is relevant, and this thing. Look at here, just this share capital and share premium, the right issue thing, share capital and share premium, the right issue goes in Soshi, that's it. So when you will be making Soshi, you will post this share capital and share premium increase, that's it, nothing else. When you will be making Soshi, when you will be making Soshi, you just have to put this right issue, share capital and share premium, nothing else, everything is just for fun. But yes, I showed you this because in my normal class, in my normal classes, I have also solved one question like this of suspense account. I have also solved one old question of suspense account. I forgot the name of that question right now. It's with T or something. Okay. But in the exam, you don't need to make this suspense and no need to show this closing, because I know when you guys were in F3 level, you used to run away from suspense. Yes, Tadian. Yes, I taught one Tadian question in my normal class. I solved one Tadian question in my normal class of suspense account like this. Okay. So don't forget these two transactions. First thing, 1,400 will be part of admin expenses And this share capital and share premium increase will go in SOSHI, statement of changes in equity. Okay. Now, just for your easiness, I would like to say, read the point number 7 first. Read the point number 7 first, because they all are connected. Just for your efficiency, I'm doing this. MIMS company paid a dividend of 0.04 per share on all existing shares at 31st December X5. See the dividend paid on the year end. The dividend paid on the year end, ordinary dividend paid on the year end, but see the stupidity. They book this dividend in admin expenses. Never. Ordinary dividends are not expense. Ordinary dividends must be deducted from retained earning. Ordinary dividend must be deducted from retained earning. It should be part of SOSHI. It should be part of SOSHI. But see the stupidity. But I should say one thing, please. This thing came 4 to 5 times in the kit. In the exam kit, this is a routine error. In the exam kit, this is the routine adjustment that they book ordinary dividend as an expense. That they book ordinary dividend as an expense. That's their routine thing. So as a student, you may ask, sir, first of all, let's calculate the dividend and then make the entry. Okay, let's do it. Let's do it. Easy thing for you. See, at the beginning of the year, how many shares were there? 60,000 shares. See the screen. At the beginning of the year, how many shares were there? 60,000. And then on 30th September X5, we issued more 15,000 shares. We issued more 15,000 right shares. So by the end, on the last day of the year end, we had 75,000 shares. On the last day of year end, we had 75,000 shares, and it was written in the question. It was written in the question that we gave dividend to all shareholders. We gave dividend on 31st December X5. So that means all 75,000 shareholders. Okay. Now, what is the formula of total ordinary dividends? Number of shares issued multiplied by dividend per share. Number of shares issued multiplied by dividend per share, which is 0.04. 4 cents means 0.04. So this make $3,000 dividend. This make $3,000 dividend. Okay. Now, can you tell me what should be the entries? Just those students who love the entries, I'm making entries for them. Otherwise, those who don't like entries, please don't follow the entries. The entry should be this: retained earning debit 3,000 and cash or bank credit 3,000. But what entry they made? What entry these stupid people made? They made this entry. They made this entry: admin expense debit, admin expense debit, admin expense debit 3,000 and cash credit 3,000. Can anybody tell me what will be the third entry? Now you guys are old enough to make this. Retained earning debit 3,000 and admin expense credit. That's it. So just retained earning debit means this should be deducted from SOSHI. Ordinary dividends are deducted from SOSHI, first thing. And also please correct the admin expense. That's it. Also please correct the admin expense. I think this adjustment was very easy. Please write on the chat box if you understand it. If you understand this adjustment, it was not difficult. Okay. Now, so we did point number 1, we did 2 and 4, 1, 2, 4 and 7. We did 1, 2, 4 and 7. Now come to 3. You know, it's my favorite adjustment, the tax adjustment, total tax packet, total tax. You know, whenever in the income statement, we always report total tax, and total tax means sum of two taxes: current tax and deferred tax, current tax and deferred tax, current tax and deferred tax. And this adjustment comes in your exam kit or past paper previously 2 to 3 times, right? Look at here. Normally when you are in profits, so tax department charges tax from you. When you are in good times, tax department charges tax from you, and that's your expense. But when you are in bad time, when you are bad time, losses time, tax department give you relief, and which is your income, which is a benefit, okay? So always there is in question, don't expect that always, don't expect that always you will get the current year tax provision or current year tax expense. It's sometime income. Now wait. The income tax figure in the trial balance relates to under over provision. Openly say thanks to them. Say thanks to them. They are openly saying in the trial balance you have under over. So as it is debit side, so it is under provision, which is expense. As this is debit side, so it is under provision, it is an expense. Clear? Now, the current tax is estimated to be tax refund. There is no current tax provision, there is current tax income. Good days. Current tax income, they are giving you benefit. So it's not, this 1.2 million is not expense, this is income. In 90% previous question, this is an expense. This used to be an expense, remember? Now this is an income. Now, in addition to this, the deferred tax liability, see, say again, thank God. The deferred tax liability closing ready-made liability is given. Even if you remember, in your normal question, they give you taxable TD. And with taxable TD, you have to multiply by tax rate and then you calculate deferred tax liability. In this question, they are giving you ready-made deferred tax liability. Say thanks to examiner. They are giving you closing ready-made deferred tax liability. Okay. Now, can anybody check the opening deferred tax liability? Can anybody check the opening deferred tax liabilities? It is 7,700. Okay. Now let me solve something for you. Look at here. Current tax refund is 1,200, which is income. Current tax refund is 1,200, which is income. And income, I will write with negative number. Then under provision of 140, I think it was 140, right? 140 is an expense. These two things make your current tax. Now come to deferred tax. Very, very tasty in this question. Opening deferred tax liability is 7,700, closing is 8,200. Can you tell me deferred tax liability is increasing or decreasing? It's increasing. So there will be a deferred tax charge of 500, which is an expense. Go. It will be added. Add deferred tax charge of how much? 500. Can you tell me the net answer is expense or income? I think the net answer is 560 negative income. This is your income. That's it. And only you don't have to make the SOFP in this question. You don't have to make the SOFP. Just income is enough. It will go after PBT. It will be added. After PBT. Student, these are scoring marks. If you can't score these marks, then please don't expect a pass. Then you deserve something special. Then you deserve to spend pounds. If you don't know this thing, sorry to say, these are very, very easy. And if you have taken normal classes, in my lectures, 7 to 8 classes of final accounts are included. 8 classes are more than enough. It's too much. Same thing, repeating. Okay. Now, again, easy. Believe me, it's easy. Because when I teach these IS, I repeat things many times, many times. Now, point number 5. Let me write the word easy or very easy. Very easy. You know, my beautiful students, my dear students, you know, in investment property fair value model, we never do depreciation. In investment property fair value model, we never do depreciation. Otherwise, people will make memes. Otherwise, you will be posted on Facebook and people will make your memes that you depreciated the investment property on fair value model. Please don't do this. Please don't do this. Now look at this. Say this accountant should be ashamed. See, MIMS acquired an investment property for 20 million. Yes, this is a cash flow. There is a baby requirement of 3 marks in this question of cash flow. This cash, they bought investment property. It's a non-current asset for investment. So this is an investment cash flows on the beginning of the accounting period. And decided to use the fair value model. That's it. Finish. Easy. Now it's very easy to account for the investment properties. Now, as the properties, now stupidity starts now. Stupidity starts now. As the property is expected to have a 20-year useful life, depreciation was recorded on this basis. Depreciation was recorded on this basis. See this. This is ACCA. The fair value of the property at 31st December X5 has been assessed at 22 million. Yes, this is relevant, but no accounting has been taken in place in relation to this. So you need to bring it to fair value. Yes, this is your job. You need to bring it to fair value. All depreciation and amortization is charged on pro rata basis to admin expenses, not cost of sale. See, they have booked this depreciation in admin expenses. So you need to do the correction in admin expenses. Giving you just 1 minute to think over it. Just 1 minute to think over it. Although this adjustment is very easy. Honestly, this is easy. So first of all, one mistake is they booked a wrong depreciation, just reversed it. And secondly, booked the gain from 20 to 22. From 20 to 22, 2 million gain in PNL. 2 million gain in PNL. See this thing. They booked a wrong depreciation is 20,000 divided by 20 years. This is 1,000. This 1,000 is a wrong depreciation. They by mistakenly they added in admin expenses. So remove this 1,000 from admin. No need to make entry. Examiner don't make entry at all. Remove this 1,000 from admin expenses. Okay. One more thing. From 20 to 22, this entry, investment property debit 2,000 and other PNL credit or gain, income credit 2,000. So this gain is normally added in investment income. This gain is normally part of investment income in the income statement. Income in the income statement, you don't have to make SOFP. Please listen very carefully. You don't have to make SOFP in this question. So just two things. One thing is correct the depreciation, other thing book the gain. That's it. This adjustment also done. OCI, why somebody's asking OCI? No, in IS 16 we book in OCI. My dear student, in IS 16 upward revaluation goes in OCI, not in IS 40, please. Okay, now let's move to the last requirement. It's IS 38. And I expect you to that you have done standard as well. First of all of you say in one voice, advertisement cost is always expense. Advertisement, according to IS 38, advertisement goes in PNL. That's it. No more discussion. Advertisement goes in PNL, one shot PNL. Now, MIMS company incurred a number of expenses in relation to brands during the year and has capitalized capitalize means asset. Capitalize means asset. Okay. 1.3 million cash was paid to promote advertisement, okay, of its major brand, which is deemed to have an indefinite life. This advertisement expense should never be capitalized. It should go in P&L. So book this 1.3 million in admin. So book this 1.3 million in admin expense. Book this 1.3 million in admin expense. Simple admin expense. That's it. No more discussion. No more entries even. Now, 2 million cash was paid in October X5 to acquire a brand. Yes, acquiring a brand is a non-current asset. Acquiring, this is not internally generated brand, this is purchase brand. This is purchase brand. This is not internally generated brand, this is purchase brand. So my respected students, yes, we capitalize it, and yes, it will go in cash flow. We have done this investment whenever we buy a non-current asset. Whenever we buy a non-current asset, this outflow goes in investing activities. This outflow goes in investing activities. Okay. Now, 2 million was paid on 1st October X5 to acquire a brand from one of its competitors. MIMS, see this date, 1st October X5 means only 3 months left before the year end. Only only 3 months left before the year end. MIMS company expect the brand to have a useful life of 5 years. Yes, it's a finite life. Finite life, you have to depreciate. Finite life, you have to depreciate, you have to amortize. Finite life, you have to depreciate, you have to amortize. Keep it in mind. Okay. Now, MIMS company intends to sell it after 5 years. At the point of sale, it is estimated that the value of the brand will have increased. Wait, making fool. They have started making you fool. This is called game. And so no amortization has been accounted for in the year. My dear students, you know, for intangible assets, you cannot use revaluation model. It's very difficult. It's very difficult to use revaluation model for intangible assets. And I hope you have studied this IS. This is the technical point. In IS 38, revaluation model is only allowed if active market for that intangible asset exists. If active market for that intangible asset, that means that intangible asset is sold on daily basis. And this brand is our brand. This brand, we just bought it. It is not going to be sold on daily basis. The brand, original brand. No. So you cannot apply revaluation model. So don't think about this revaluation stuff here. Simply depreciate it 3 months. Simply depreciate October, November, December, 3 months depreciation. How? Wait. 2 million means 2000 divided by 5 years. 5 years. Per annum, it is 400 per annum. Multiply by 3 upon 12. 400 per annum multiply by 3 upon 12. This is your depreciation. 100. And this depreciation will be part of admin expenses. So you need to increase admin expenses by 100. You need to increase admin expense by 100. You need to increase admin expense by 100. Okay. Luckily, I have discussed all the adjustment of this question. Yes, it's taking time because I'm teaching for teaching purpose. I'm repeating things. It takes time. But in the exam, you won't have to incur this much time if you have already done good practice. Now read the requirements. Read the requirements. Read the requirements, please. 3 things you have to do. Prepare the statement of profit and loss. No more Soshi, only statement of profit and loss. And they are not asking any working now. Only they want a statement. They want a statement. Number 2, they want a statement of changes in equity, Soshi. And finally, they want investing 3 marks. See, 3 marks. This is 3 marks. They want cash flow from investing activities and cash flow from financing activities. These are the 3 requirements. These are the 3 requirements. These are the 3 requirements. I will solve it on Excel. I will solve it on Excel, but won't take much time now. Won't take much time now. Now, wait. In this question, it was clearly written. See that all depreciation, this point students are asking, all depreciation and amortization is charged to admin expenses. In this question, all depreciation and amortization was charged to admin expenses. In this question, all depreciation and amortization is charged to admin expenses. Okay. I have a request with you guys. If please take a picture of this. Otherwise, now I'm going to switch my screen. I'm going to switch from iPad to laptop. I am going to switch from iPad to laptop and I'll solve it in front of you. I'll solve it in front of you on Excel. Okay. So please take the picture. Yes, if nothing is written, then normally depreciation is part of cost of sales. But normally this is the practice of examiner. They guide you for depreciation. They guide you for depreciation. Respected students, they guide you for depreciation. Okay. Now let me shift myself to Excel. Just a second. Okay. Can you see there is something written in front of you? Now, as we have very limited time and already we have taken a lot of time because of the repetition and all. So I have already written the names. I have already, in the exam, you won't be given these written names. You have to type it. Some innocent students sometimes ask me, sir, will we get this or these all written in the examination room? No, you have to type it. You have to type it. Now, let me do some working for you. Admin expense and tax expense is a bigger head, but honestly, look at here. If you see the marking scheme, examiner even didn't do the working for these. Examiner now directly do in the income statement using brackets. Using brackets, they directly do it. They don't care. They don't care about these workings. So, but just for you, I'm doing it here. As per TV, what are the admin expenses? What are the admin expenses? I think they are 10,900. Okay. Now, hope you remember there was a 1400 provision. There was a 1400 provision and we have to increase. We have to increase the expense. We have to increase the expense. Okay. Then promoting brand was an expense. Promoting brand 1300 was an expense, but they didn't book it as an expense. Promoting brand was an expense, but they didn't book it as an expense. So let's book it. Then amortization 100. Amortization 100. Recently we did. It's also an expense. Depreciation of investment property. These fool people forcefully booked it. So let's subtract it. Let's subtract it from admin expenses. Okay. Now, dividend. They mistakenly booked 3,000 dividend. They mistakenly included 3,000 dividend. So let's subtract it. Let's remove it. Okay. So finally, your admin expenses will be 9,700. Your admin expenses will be 9,700. Okay. Now, just take a minute for this. Your tax expense under provision was, I think, 140. Yes, it was an expense. Sorry. Your current tax, remember your current tax, the current tax receivable was 1200. Your current tax income was 1200 and increase in deferred tax expense was 500. So let's 560 was your this income. Wait a minute again. Sorry. Yes. Okay. Now let's make something here. Come to revenue. What is your sales revenue? There was no adjustment of sales revenue. I told you to take the picture. I told you to take the picture. If you didn't take it, it's not my fault. So your revenue was 24,300. Then your cost of sales was originally 11,600, but you need to deduct 700. You need to deduct 700. Remember, so it will be 11,600. Just showing you some working, minus 700. 11,600 minus 700 will give you 10,000, 10,900, 10,900. Now calculate the gross profit. This is your gross profit. Admin expenses, respected student, admin expenses I have already done working, but I want to do it with negative sign. So let's go to admin expenses and pick it up. Okay. Now distribution cost, no adjustment for distribution cost. No adjustment for distribution cost. Copy it as it is. Okay. Now wait. Profit before interest and tax. Profit before interest and tax. Profit, let me highlight GP. These three, that's it. Profit before interest and tax is 3,600 negative. There is no positive profit. You have a negative profit. You have a negative profit here. You have a negative profit. Now, how much is the interest expense? How much is the interest expense? Finance cost, interest expense, or you write finance cost. Just pick from the question. It was 1,400. It was 1,400, and yes, this is the expense. So write it with negative sign. Investment income. Already in the question, investment income was 500. Already in the question, trial balance, investment income was 500. I can't see the chat box now. Okay. So please, I can't see the chat box just for a few minutes. So investment income was 500. And you remember there was an upward revaluation. There was some upward gain on fair value of investment property. So that was, I think 2,000. So this makes 2,500 positive. This makes 2,500 positive. Now wait, let's calculate profit or loss before tax. Profit or loss before tax. This, and this. See these three numbers. So again, the answer is negative 2,400. Now for tax expense, my dear student, we have already done this working. For tax expense, we have already done this working. So let's just adjust the last two numbers. 3060. Now wait. Now just wait 30 seconds or 1 minute and have a look. And please don't take tension. This working is not difficult. Yes, dealing with the question, some part of this question was technical. Otherwise, this question was better than ratios question. This question was better than ratios question. Wait, one thing we did wrong. Sorry. One thing we did wrong. You have a tax income. Negative 560 means tax income. So normally in the income statement, when tax is an expense, then you deduct it. When tax is your expense, then you deduct it. So you will copy it with the positive sign. Just think over it, all of you. At this time, tax is not your expense, it's your income. So income comes with positive sign in the income statement. Okay. Now, my mistake, sorry. This is your profit loss after tax. This is your loss after tax. Let me open the chat box. My dear student, listen. Tax is an income this time. Tax is an income. Net amount is the income. And income always come in the income statement positive. In the income statement, income comes with a positive sign. Expenses, with we deduct expenses, we add income. Yes, you can write tax income. We can write tax income, yes. Okay, so now let's move. Please don't use pen. Please don't use pen on your sheet. Now let's move. Let's do the Soshi thing. Now go to the trial balance. How much is this ordinary share capital? Your ordinary share capital is 60,000. Share premium is 0, no share premium. What is the opening retained earning? It's 43,200. 43,200. Now, I'm not going to make this, wait, I don't want to make this total column. Now, this is not the requirement. Let me cancel this total column. Let me cancel this total column. So because in the new world, there is no need of making this total column at all. There is no need of making this total column. Please save your time. Now there is no need of making this total column in this new world. Okay. So these are the opening balance. Now, first of all, remember IS 8 in this question, there was some IS 8 prior period adjustment, and you have to adjust the opening retained earnings. So first do it. Reduce your opening retained earning by 700. Reduce your opening retained earning by 700. And now copy paste these balances, copy paste these balances. Okay, so here you have the copy paste. Now in Soshi, few things goes in Soshi. Listen, right issue, yes, we'll post. Bonus issue, yes, but there is no bonus issue in this question. Third thing which goes in the Soshi is total comprehensive income, or you call it profit, because in this question there is no revaluation. In this question there is no revaluation, so forgot about revaluation, but yes, about profit and loss. The fourth thing goes in is ordinary dividends. And fifth thing, sometime there is a transfer entry. There is a transfer entry of IS 16, revaluation reserve debit and retained earning credit. In this question there is no. And sometimes, just for revision purpose, I'm saying sometimes during the year you issue convertible loan note. Sometimes during the year you issue a convertible loan note. So convertible, whenever a convertible loan note is issued, there is a equity option. A new equity option arises with convertible loan notes. So that also goes in Soshi. But in this question, no such things. So let's start first of all post right issue. Because of, remember the entry of right issue. Because of right issue, share capital increased by 15,000. And retained earning increased by 37,500. So share capital increased by 15 and retained earning increased by 37,500. No need to make the total column. No, this is not any. In any exam solution now, there is no total column. Leave the total column. Now, profit and loss. My dear student, profit or loss is adjusted in retained earning. Simply pick it from income statement C. I just did. Now, what are the dividends paid? Dividends paid are 3,000, and dividends paid are also deducted from retained earning. So now this is 75. This is how much? 37,500. And this is, 42,500 and these two. Okay, so that's the end of these two requirements. Let me open the chat box. Let me see. Okay. Now finally make the two activities. Finally make the two activities. Finally make the two activities. The investing activities and the financing activities. Okay. In investing activities, you write purchase of non-current asset. If you have bought any non-current asset, you will write the outflow. So yes, you bought the brand for 2000. You bought the brand for 2000. Remember, you bought the brand for 2000, and then you bought investment property on 1st January, on the first day of accounting period, for 20,000. For 20,000. Okay. So these are the two outflows. These are the two outflows, nothing else. These are the two outflows. These are the two outflows. So in investing activities, the total net cash outflow is 22,000. In investing activities, the total net cash outflow is 22,000. Now go to the financing activities. In the financing activities, yes, you issued new shares. You issued new shares, and remember the entry which I showed you, it was, I think, 52,500. Yes, it was 52,500. It was 52,500. And then there is no non-current liabilities movement. We didn't read anything about repayment of loan or issue of loan notes. We didn't read anything about issue of loan notes or repayment of loan notes, so ignore it. But yes, there is ordinary dividends paid of 3,000. There is ordinary dividends paid of 3,000. So you need to deduct it. Okay. So finally, now, okay. So this is the end of this question. I just want to ask one question. Did you find ratios question difficult or this question difficult? Keep one thing in mind. We did this on the second number. I intentionally did this on second number because students normally find ratio analysis difficult. Students normally find ratio analysis difficult. Which question was difficult? Can you tell me? Ratios one? Yes, ratio is difficult. Yes. Final account is not difficult. Final account, this type of final account, this was achievable because many things was related from your book or from your lectures. See, investment property, the taxation packet, the right issue thing, these are normal adjustment, routine adjustment. I would give you one last advice to you guys. Keep a folder for your mistakes. Maintain a folder for your mistakes. Whenever you do any mistake during your study, write it somewhere. Special folder for mistakes. Write at least 150 mistakes in it and then revise it so that you don't repeat it. And try to write that mistake in detail, that this was written and you took it in this way. This was written and you interpreted it wrong. Try to write notes on your mistakes and make a file of your mistakes. Then keep revising it and try not to repeat it. This will help you. Believe me, this will help you. Make a folder for your mistakes. And to be very honest, there are some times of studies. Even if you see me, I also don't take any break, anything. Last Sunday, I'm talking about the last Sunday, 20th Feb. In the class, I also told, I took 2 classes of 3 hours, continuous 3 hours classes webinar, and it's very difficult because there is no mic. In this class. And it's very difficult to take online class because you sit on the chair. Normally, when we take physical class, we move here and there, and we just do fun. But in online class, constantly you have to speak. So I took 6 hours class on Sunday, 6 hours, 3 hours, 2 classes. One is SBR and one is SBR P2P sessions, and one was TX session. And then I did business meetings also. And it was Sunday. Plus it was my birthday as well. But I worked all day. I worked because I know Once I'll be free with these stuff, I can go anywhere and I can take a week off. I can take a week off. I can take 10 days off. But this is the right time to work hard. We should know this is the right time. So please don't waste your money. Don't waste your exam fees. Don't waste your precious time. Lot of jobs are waiting. To be very honest, I am connected with many audit firms partners in I'm talking about the Pakistan, because the issue is many students going abroad now. After affiliation, people are going abroad. After part 2, people are, so there is a shortage of accountants. There is a shortage of good accountants, I would say, good accountants. So if you clear paper and if you work ethically, good jobs and lot of opportunities are waiting for you, but try to first finish these papers. Okay, so I will also update the recording of this class soon. Okay, so take care and best of luck, and stay motivated and behave ethically on the WhatsApp group. Okay, thank you. Take care. Bye bye.